Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is David Kuo, the founder of the Smart Investor in Singapore. David, as always, great to have you on the show on this Tuesday, cold Tuesday in KL.
Well, I tell you what, Brian, I've only just recovered from the Euro 2020 Cup final. I stayed up until 6 o'clock in the morning watching that game. And yesterday I was walking around like a zombie.
Were you an Italian fan or a fan of, did you want England to win?
I tell you what, Brian, a lot of people ask me that same question. And what I told them was I was going to support the team that had the most number of Chelsea players in, because I am a Chelsea fan. And England only had one Chelsea player in there, Mason Mount, whereas Italy had two. They had Emerson and, of course, Jorginho, who managed to miss the penalty. So I was supporting Italy throughout simply because they had more Chelsea players in there.
Now, David, moving on to markets across the region. Before I get your insights, we're going to talk about crypto markets and then the stock markets across the region. We'll start with the crypto markets. Bitcoin is at 33,085. It's down 3.97%. Ethereum is at 2,027. It's down 6.33%. Now, moving on to the exchanges, we'll start with the SGX Straits Times Index. That's at 3,168.03. It's up 0.66%. Bursa Malaysia, the FBM KLCI is at 1,517.42. It's up 0.3%. Now, across the region, again, all green. It's the Nikkei at 28,711.44. It's up 0.5%. The Shanghai Composite is at 3,556.27. It's up 0.24%. Hang Seng is at 28,027. It's up 1.86%. And ASX 200 rounds up the numbers at 7,347.8. It's up 0.19%. A lot of optimism in the market. David, tell me why.
I think it's primarily because of the US earnings season that's coming up. And I think people are expecting, number one, the banks to do exceedingly well. And number two, things like what they call the reflation trade. Companies like PepsiCo will be reporting today, and I'll be watching those PepsiCo results very closely. But generally, it'll be the banks. And I think the banks are going to be compared with this time last year when they were not behaving, but I mean, the results were terrible this time last year. And so many people are looking at the banks this time around and saying that maybe there could be a doubling of the profits compared to 2020.
Well, that's also from a lower base. And also now, I suppose the markets are looking to the banks because globally, as we entered the downturn related to COVID, banks were prevented from paying out dividends or had to pay reduced dividends. So is that also factoring into the equation that they will start to pay normal dividends again?
Well, definitely. I think there's a couple of things. I mean, the first one was that people know that banks are at the forefront of any economy because, I mean, they are there lending money. Yeah. And of course, we had this COVID-19 pandemic and people were terrified. I mean, they were saying, what is going to happen to the banks? And even the banks themselves didn't know what was going to happen. So consequently, they made lots of provisions for bad debts and they were very cautious, which is absolutely right. But as it has turned out, Brian, they didn't need to be as pessimistic as they had. And so many of those provisions have now been written back. And as a result of that, their profits are going to look a little bit better than this time last year. That is point number one. Point number two is that as the economy starts to open up again, people will be watching very carefully to see are businesses going out and borrowing money. And of course, you know, the banks have plenty of cash anyway. And what are they going to do with regards to people or companies coming out and borrowing money? It's only natural because as you go into a pandemic, you tighten your belts, you try and sell off your inventory. But as you start coming out of the pandemic and also the so-called recession, then what you will get is companies saying, well, we need to buy more stock. We need to actually have more capital to grow the business, to take into account the fact that the economy is growing again. That's point number two. And then number three is the point that you make very well, which is that because the banks are healthier, the regulators are now saying that the banks can buy back their shares, the banks can start to resume dividends again. And those three things put together, I think will underline the performance of the bank shares in 2021.
Now, I want to stay in the US and talk around an article that you had in your Smart Investor website that talks about 5 resilient US companies offering sweet dividends and growth. Could you share with us what those 5 stocks are and why you like them?
Well, okay. I mean, first of all, you have Nike, and Nike has proved to be quite resilient throughout the pandemic. Maybe it's because, just like you and I, we go out and buy a new pair of trainers and go out and do a little bit more exercising. So that probably accounts for why Nike has done well. Another one is American Tower. I mean, this is a tower operator. In other words, it owns the tower on which the telecom companies have to put their dishes, and they have done exceedingly well. And not just during 2020. I mean, a company like American Tower has been doing very well for a very long period of time.
So American Tower is something like, correct me if I'm wrong, it's like a REIT for telecommunications towers, correct?
Absolutely. And so they have to pay out a vast proportion of their income. They literally rent out the towers. So they own the towers, they rent them out to telecom companies, because telcos or telecom companies don't really want the hassle of running satellite dishes and all the various things that go towards communication. They just want to run the telecom business. And so they farm out this business to a company like American Tower. There's another one called Crown Castle, which does a very similar sort of business. And essentially what the telecom companies are saying is, you manage the tower, you manage those dishes, you make sure that they're operational, and all we want to do is to put those dishes on there, and the rest of the business is yours to do. So, I mean, that has done very well. I mean, I'll go back and talk about American Tower a little bit later, because there is something really quite special, quite mysterious about American Tower, which is really great for income investors. So anyway, we also have a company like Polaris, which makes vehicles, snowmobiles and stuff. We also have Apple. Everybody knows about Apple.
Yeah.
And then finally, we've got Tractor Supplies, which is a company that provides feedstuff and generally provisions for people who keep their own farms and things over in America. But like I said, I will go back to American Tower and highlight why American Tower, together with these other companies, are really quite special. If you look at American Tower, the dividend yield on American Tower is quite appalling. It's below 2%. And a lot of income investors will say, why do I want to go and buy a company that only has a dividend yield of 2%? Well, the thing about American Tower and these other companies is that they have the ability to grow their dividends at a very fast pace. And in the case of American Tower, it can grow its dividend at around 20 to 25% a year.
How does it do that?
Simply because, number one, it is a REIT, so it has to pay out that dividend. And number two, it has tremendous cash flow. You put up a tower, you put up a dish, and that's all you need to do. And then after that, you rent it out and you collect the rental income, and then you pay it out to investors. And also, the other thing about the telecom towers is that as we go, or as we progress through the telecom sector, what we tend to find is that companies need more and more dishes to be put onto these towers in order to supply the data that people need. And as we go into 5G, first of all, the towers need to be closer together, so the telecom companies need more dishes. And secondly, the amount of data that is being generated by you and I right now using Zoom, I mean, all of that has to be carried. And so because of the amount of data that is required, telecom companies need more dishes. More dishes means, well, more rental revenue for a company like American Tower. But going back to American Tower, about 3 or 4 years ago, the share price of American Tower was about $100 US. Today, it is north of $200 US. So what has happened is that because the dividend has been increasing over time and people know that the company can pay the dividend, it only pays out about 50% of its cash flow as dividends anyway. because they know that the dividend is going to grow, they're going to buy the shares. And because they buy the shares, the share price goes up and the dividend yield today is still 2%, right? But the difference is that it has that ability to grow its dividends over time. And I want to leave you with one thought by Warren Buffett, who said that someone is sitting in the shade today because someone planted a tree many years ago. And I planted my American Tower tree about 4 years ago. And today I'm sitting in the shade simply because I'm just sitting here collecting the dividends and I'm getting some capital growth at the same time.
And I will be interviewing a very similar company to American Tower on BizTech CEO Conversations called E.co, which is in Malaysia. I think I'm doing that next week. So stay tuned and watch that one. So it's exactly the same.
I will be watching that one, Brian. I will be watching that one very intently.
Now, David, thank you very much for your insights today.
Thank you.
Now, we've been speaking to David Quarter, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms and support us. Thanks for tuning in.